Hi and welcome to the Market Alert for Thursday, the 4th of March 2020. So, historic repo market insanity, 10-year trades at -4 in repo ahead of monster short squeeze. So we're back to the repo market problems again that we saw in September 17 as well, but slightly different. The key to this though is here tomorrow, which is today. Jerome Powell is allegedly going to unleash some crazy fireworks in the bond and stock market. So let's see what he has to offer later today. And it says why the SLR is all that matters for the markets right now. If the SR relief, this is the security liquidity relief thing for the banks. If it does not happen, buybacks mean that banks will trim their balance sheets on both sides, shedding deposits, reserves, and also treasuries, and that could cause all sorts of problems in the market. So this is today at 5 p.m. UK time, so keep an eye on this one. It's going to be interesting, but they need to get this yield under control, as you can see here. Currently trading at 1.47, and the last 5 days you can see that even they've had a bit of control. Yesterday, this out of control again at just under 150. They don't want this at 1.75 according to JP Morgan. You certainly don't want it at 2%, so they need to start looking lively. This is putting huge pressure on the market. As you can see, the implied volatility increasing from 18.46 to 19.43 yesterday as well, and remaining red because we're below the 20-bar moving average in the Dow, and above this in the implied volatility. So we are on the weakness side of things at the moment. So let's start off overnight looking at the Dow, and you can see the Dow's already had a move to the downside overnight. Moved down yesterday after failing to close above the 62%. Yesterday morning in the pre-market for the Dow, it just simply wouldn't break this area. It attempted it, got through for a few ticks, and then the market moved lower. So if the Dow is to hold, it's got to stay above the 31,016. But I suspect the market's going to be pretty sideways today, waiting for Powell and his magic words to offer something to the market that will stop this current situation with the yields where they are continuing to move to the upside. This is not good. Also yesterday, the 5-year yield was at 2008 highs, which is terrifying, frankly. If this continues, it's going to be bad news for the stock market, that's for sure. It isn't going to help the gold and silver market in the short term, but then that will change as the US starts to fall apart, which we'll have a look at in a moment. We'll just have a look at the US dollar. But going to the German DAX, again, you can see yesterday we went to the all-time high. No doubts about this, really. Market stopped here and then has just sailed all the way down as it ran out of steam, and currently at the 38 and 50% retracement from this low to the new all-time high, which I actually need to mark up here. So we'll just pop that. Let's just remove this and this, and we remove that 89 as well. So we'll just put in the new all-time high, and also we've got that drawn in. We've got nothing on the upside at the moment, so let's leave that as it is, and let's have a look at the overnight. Again, just before I do that though, you can see that we headed down towards the 50% there before prices turn around and move back to the upside. So overnight we can see that prices are pretty much sideways. Let's just drag this over. Well, say sideways to lower would be more like it. So we're already below the DP and the 200 when we kick off. We've got the low here, which is very important, and you'll see this was taken out with selling in this area. They tried to buy it back, but had to get down to this support here overnight to see the cluster of volume to bring prices back to the upside there. So at the moment we're sitting at yesterday's low. That seems slightly odd to me. It is. They're using again this new way of doing things, which is not quite yesterday's low, which is very frustrating. It's a bit higher actually. Let me just draw this in. It used to have a break, and then it would continue. It would hold the previous day's lows and highs, etc. But for some unknown reason, it's not doing this anymore. It's very frustrating as they've gone to 24 hours of just issuing prices. So that's 13,977. So it's in the area. It's just not quite there. 77. Let's have a look here. I might actually be... No, 77 is just here. There we go. Yeah, so it's more or less in that area, but very frustrating. I need to get this changed in the software so that we get the correct fibs there. So let's squash this a bit more, have a quick look, see where we are likely to go. We've got the DP up here. If prices move to the upside, it's got to take out the 200 as well. It's got to find support at the low. Failing to do this takes us down to the S1 and then down into the fib 50% retracement there, and also 62, where things start to get interesting. Now we're also below the 5 bar and the 20 bar moving average as well. So this market has been trading sideways now for some time, as you can see, very choppy, and each occasion we've gone red, they've managed to bring it back. But like I say, it's down to our saviour Powell to see if he can save the yields. If he saves the yields, the stock market goes back to the upside. Meanwhile, the silver market also under a lot of pressure at the moment, as you can see, but they keep buying back at the 25.80-ish level at the moment. I have reservations about this holding, I must admit, and I would expect this to come back down to around about here, 24.67. I don't want it to, but for some unknown reason I have this funny feeling that Goldman and Co are outgunning to move this lower. Meanwhile, in the US dollar, which I also wanted to mention, this is the daily chart. You can see that also, to add to the silver pressure, the US dollar has moved higher, added to the pressure on the gold market as well. But we're now at 89 and 78% there, which could see this move back to the downside. It'll need to take out this low over here in order to send a bit more support to the metals market. Okay, that's a roundup of yesterday, what to expect today. Also, the important news, like I say, keep an eye on Powell at 5 p.m. That could be a very interesting one. And let's see if he does unleash some assistance for the bond markets. Okay, let's have a quick look at yesterday's trades and see what happened there before I conclude. So yesterday the market sold off a bit in the, well, sold off, it had a bit of a pullback in the futures when it opened, but you can see them buying back in here with the buying pressure, and then further covering of the shorts there as prices came back. And I should fast forward through this. Market traded sideways, and as we drew up in yesterday's daily chart, we were expecting the market to move to the upside. So you can see the blue line that I've drawn in there, which was the 89%, and then the market trading sideways. There you go, you can see the 89 trading straight to this, and then of course we had the other extensions to get through, or the highs, which you can see there, and the all-time high. You can see the market was gunning for this, and prices then traded through, and then I've moved the line, which you can see there. And eventually the market started to come back. Matter of taking profits. You can see huge volume there stopping the market. But we hadn't reached the all-time high at this point. Profits off the table. The market then drifts back down to that 89%, which is the cyan line. Market trades sideways, manages to move back up to the high that it's made here at 81, but fails to hold. And prices then show more potential weakness. We had a sell signal here. At this point, my MT4 became unresponsive, and I had to restart everything, which is why you saw the blue screen there, and then I'm playing catch up. But notice here, you will see that the market put in a buying pressure bar there. There's a warning bar that we're down at the BRN. And the volume in this bar is greater than the previous bar's range and volume, which means that they were buying back here, which is why prices came back and you'll see there them moving back. And of course, as I said, they were heading for the all-time high. They wanted to achieve this, and that's precisely what they did. As we fast forward through the morning, again you can see them attempting a short there, the bit of a spike. Let's shake everybody out first. Let's shake the weak holders out, those who've got tight stops. The market came off the lows, the volumes increased, and prices then moved back up. That's the all-time high from the previous, I think it's the all-time high. No, 14,200, isn't it? This level. And here in the 1 minute, you can see at this level also we've got selling pressure as prices hit. If I just move this on, hit this level here that we had drawn in the other 89%. So the market then attempts to get to the all-time high, which it does. And then prices drift sideways to higher. Then we get another potential short, as again we can see them buying back in immediately. They still want to try and get through this 200, but as we go forward, you'll see through the morning prices fail to do this. And this was what was left behind of the high, all-time high in the 2 minute chart, as prices then traded sideways. So then I'm going to move on to the back a bit, because I want to show you something here. We had the ADP numbers at 130. Good sector. Jobs tumble most since April, as ADP employment gains slow in February. This is not going to bode well for the non-farm payroll figures on Friday as well. So the market for mid-morning trading lower, and then I'm just going to fast forward through to the start of the afternoon session there. So prices finding support here. Again, you can see a big cluster of volume as they buy back at the DP level. We've also got a retracement before attempting to move prices to the upside. So immediately we have a sell signal. We know this is going to be a tough one because the volatility first off, and we see that is what happens. On the buy side, of course, there's always the chance of making some progress back to the upside, but we've got resistance to the left here. We're still in the opening 10 minutes of the market. Unless it breaks violently, then, as I've said before, you want to just grab whatever you can grab on these initial trades. And that's proven to be the case here as the market came back. You can see the potential weakness. It then starts to reload again. There was a problem with the data coming through yesterday on MT4. But eventually this sell side moved lower, taking out the DP. We did see some buying pressure doing the damnedest to try and hold at this level. And again, you can see this here where we've got this cluster, but the Dow was struggling with that 62% and moving to the downside. And here we see prices then coming back. You can see another spike there, huge volume after we've been open. So a lot higher volume at the DP where you'd expect to find some support, and also at 78 and the 62 level, which would have been around here. So this also supporting the market temporarily. And again, let's have a shakeout, see if we can find any more sellers. They take it down to 78. You see them buying in, and then the market is brought back, and then it's a matter of trading sideways as the market waits for the ISM numbers. They came out worse than expected. If I just roll this forward, let's have a look. I had to go back to those. Amazing, you can never find them when you want them. It's always the case. They came out 55.5. I can tell you what the figure was. But for some unknown reason, I thought I'd recorded that on the screen, but obviously not. So, yeah, bad news for the ISM. Market trades down to 89% and then finds a bit of support and then starts to move down to the BRN. Again, you see them trying to hold at this level, and eventually they're waiting now for the crude oil inventories, and they bring the market straight back as quickly as they can. And here I might have this one. This came in at minus 21 million, if I remember correctly, or 21 million. It was one or the other. Let me just, 20. It was a surplus of 21.6 million, not minus. Prior to this, there was a minus 1.3 million barrels, i.e. last week. So the market then sideways, stuck at the DP, manages to break through, and that's where the afternoon ended. So it was really choppy and news driven for yesterday afternoon. Okay, that will do it for this one. Again, a lot in it, but there is a lot to cover at the moment, so apologies for the length of it. Hopefully you'll find it useful, and as ever, thanks for watching. See you in the next one.